Hello, and welcome back to Explain the Charts, your go-to channel for in-depth technical analysis. Today is October 3rd, 2025, and we are diving deep into one of the market's most talked about stocks, Tesla, ticker symbol Tesla. There is a fascinating and paradoxical story unfolding right now with Tesla. The company just announced record-breaking third-quarter deliveries, crushing Wall Street estimates with approximately 497,000 vehicles. Normally, this would be incredibly bullish news, but the stock did the exact opposite, selling off sharply. The market is interpreting this as a classic sell-the-news event, fueled by concerns that these strong sales were pulled forward by customers rushing to claim the $7,500 US EV tax credit before it expired at the end of September. This raises serious questions about demand sustainability for the fourth quarter and into 2026. While the short-term picture is cloudy, many long-term bulls, like Wedbush analysts, are shifting focus to Tesla's AI, robotics, and robotaxi ventures as the true value drivers, even raising price targets to as high as $600. So we have a major conflict between a bearish short-term reaction and a potentially revolutionary long-term story. Let's turn to the charts to see how this is all playing out and what key levels we need to watch. Starting with the daily chart for the big picture, we can see Tesla has been on a wild ride over the past year. After hitting a 52-week high around $488 in December 2024, the stock entered a prolonged period of correction and consolidation. Then, in September of this year, we saw a powerful rally from the $330s, driven by anticipation of these strong delivery numbers. This rally culminated on October 1st, with the stock closing strong near $459. But look at this candle from yesterday, October 2nd. The stock gapped up at the open to over $470 on the delivery news, creating a bull trap before reversing and selling off relentlessly throughout the day. It closed at $436, forming a massive bearish engulfing candle on exceptionally high volume of 137 million shares. This is a powerful reversal signal and confirms the market's sell-the-news sentiment. Today, the selling has continued, with the price currently trading around the $422 mark as it tests a key support zone. The high of that October 2nd candle, around $470, now stands as formidable short-term resistance. Now, let's zoom in on the hourly chart to see that dramatic reversal in more detail. Here we can see the price action from the last few days. Leading into the announcement, you can see the steady climb and consolidation at higher levels. Then, at the market open on October 2nd, you see this massive gap up, followed immediately by intense selling pressure hour after hour. There was virtually no bounce as sellers remained in complete control all day, breaking through several intraday support levels without hesitation. This kind of price action shows a significant and decisive shift in market sentiment from bullish to bearish. The prior day's close around $459 was broken, then the psychological $450 level, and finally the $440 level, all in a single session. Switching to the 15-minute chart for a micro-level view of yesterday's trading session really highlights the story. You can see the initial excitement in the first 30 minutes, where the price tried to hold above $470. But then the sellers stepped in, and the breakdown began. Notice the increase in volume on the red candles as the price cascaded downwards. This shows strong conviction from the bears. Each attempt at a small bounce was quickly sold off, which is a classic sign of a strong downtrend. Watching this intraday price action would have been a clear signal that the bulls had lost control and that the news was not being received positively by the market. So, let's go back to the daily chart and summarize what this all means. The battle lines are clearly drawn for Tesla stock. In the short term, the sentiment is decidedly bearish following that massive reversal. Let's recap the most important price levels to watch. Key resistance is now at yesterday's close of $436, followed by the $450 psychological level, and then the October 2nd high of $470. For the bulls to regain control, they must first reclaim and hold above $440. On the downside, key support is the current zone around $419 to $422, which was a low from today's session. If that level breaks, the next major target for bears will be the significant psychological level of $400. Below that, we could look at filling the gap down to the September consolidation area in the $350 range. Given the strength of the reversal, I believe there is a high likelihood, perhaps a 70% chance, that we see a test of the $400 level in the coming days or weeks. This bearish scenario would be invalidated if buyers step in with high volume and push the price back above $450. The bullish case, where we bounce from here and reclaim the recent highs, seems less likely in the immediate short term, maybe a 30% chance, without a new catalyst. The most important thing to look for now is whether this $420 support level holds. The next major event on the horizon is the Q3 earnings call scheduled for October 22nd. Investors will be laser-focused on the company's guidance for future deliveries and profit margins, which will likely cause the next major move in the stock. Before we wrap up, it's crucial to remember that this video is for informational and educational purposes only. This is not financial advice, and you should always conduct your own research and due diligence before making any investment decisions. Trading involves risk, and you should understand your own risk tolerance. Thanks for watching Explain the Charts, and we'll see you in the next one.